The jobs report just came in. 73,000 jobs added instead of the expected 100,000. So if you remember back in July, I broke down one of those earlier reports claiming unemployment was down and everything was looking great. But when you actually looked at the data, it told a different story, just how they record the numbers. So now the real numbers are catching up. This week jobs report pushed the 10-year Treasury down significantly, kind of shifting the narrative from inflation worries to real signs of an economic slowdown. So this puts a September rate cut back on the table, but it also adds volatility because if the market starts pricing in a cut and doesn't get one, things are going to swing fast the other way, right? And if for some chance they start pricing in a 50-point basis cut and it doesn't deliver, it's going to be springing back and forth. So it's all about expectations going forward. The data's coming out, but then there's expectations about what's going to happen. So that's what we need to look at because here's the bigger picture. Everything I've been sharing with you has been playing out. We've got a sky-high stock market while people are losing jobs. None of it makes sense. I mean, we've been talking about this. Hopefully, the inflation fear-mongering is done. That inflation's not coming. We've talked about this. The focus should be now on the real data and the data that's pointing towards a weakening economy. But with that comes an opportunity to really do this soft landing that they talked about. Because if the Fed can manage this right, jobs start cooling off, which has already happened, the economy slows gently, and they lower rates in a controlled way. And this mortgage spread of fear of inflation, but if it loosens up a little bit, we're going to get rates closer to 5.5%. And that's when everything will unlock. Because right now, the economy is frozen. There's buyers out there, but way too many people sitting on the sidelines because they're worried about job loss, just job uncertainty. There's tons of things holding people back. But just imagine it this way. Someone with $100,000 in credit card debt can refinance and roll that into a mortgage and go from paying more in their credit card interest than their actual home loan because they have a 2.5% rate. Things become manageable again. And that's the path to a soft landing. So as bad news hits, people are going to start to refi, consolidate debt, start redoing projects that they were holding off on. So we could see a cycle where some are hurting and others are recovering, but that is your soft landing. So bottom line, if you own assets, you're going to be in better shape. Houses, things like that, because you'll have these opportunities that someone who rents doesn't have. Like you can pull equity out of your house. So keep following the data, but big market update today.